Good afternoon everyone, you're very welcome to today's webinar on auto enrolment. For those of you who've just logged on, we've already completed a sound check. It should be possible to increase the volume on your phone, or if you're using the mic and speakers option, you can increase the volume on your computer. Today we'll be presenting auto enrolment, a new revenue stream for payroll bureaus, which is specifically designed for accountants who have payroll clients. Today's webinar will aim to make it easier for you to help your clients with their new auto enrolment obligations and highlight methods to streamline your auto enrolment process. The webinar will be presented by Byrne. Paul is Managing Director here at BrightPay. He is also a chartered accountant, having previously spent 20 years running his own practice. Paul will give his fairly unique insight into what auto enrolment will mean for bureaus who process payroll for their clients. He will talk you through his thoughts on how to capitalise on this new business opportunity. You are more than welcome to type in questions into the questions bar at the right of your screen throughout the webinar. We will have a Q&A section at the end of the webinar for about 5 to 10 minutes, and we will get through as many questions as we can. We are also running a free competition to win a BrightPay Bureau licence, and we have not one but 2 to give away today. The competition is open to attendees who stay for the entire webinar, and details of the winners will be emailed out to everyone afterwards. I will now pass you over to Paul, who will present today's webinar.
Thanks, Rachel. Hi everyone, and thanks for joining us today. Just a small bit about myself to start off. My background is as a practicing accountant. I started my own practice way back in the 80s and eventually grew to a 3-partner practice with 10 staff before doing something completely different and moving into software development full-time. While in practice, I provided payroll bureau services for about 30 clients, so I have some idea of what it is like in the front line. A large part of my motivation in getting into payroll software development was to make better software than what I was using at the time. So far, the company has grown to 65,000 employers across the UK and Ireland, and it's a figure that we're improving on every year. So here's the agenda for the slot today, which I hope you will find informative and give you a bit of food for thought. When talking, I will probably refer to auto enrolment or automatic enrolment simply as AE. Okay, a quick recap on what AE means, and just to note that this is only a summary. AE is a vast subject, and some areas are highly complex. It would take days, even weeks, to cover the subject properly. At the end of the day, you do not need to have an in-depth knowledge of AE. It is up to your pension provider and payroll software provider to filter out all the noise for you. So in short, AE is a government initiative to help more people save for later life through a pension scheme at work. AE is being rolled out in stages across all employers and started with the larger employers in October 2012. By October 2018, all employers will be required to offer workplace pension schemes to eligible workers. Okay, you'll see from this particular slide that January 2016 is essentially when small and micro employers start to stage, with 110,000 employers set to stage the January to March 2016 quarter alone, and over 1 million more employers from there on. This is the start of the so-called tsunami, and things may get hectic from there on. A lot of the companies staging before now would probably have had their own HR people, in-house accountant or payroll department to help them through the enrollment process. The vast majority of those staging from January 2016 will have no in-house expertise and will more than likely turn to you for help. So you have a gift-wrapped business opportunity. What AE actually means for an employer is that from their staging date, or from the deferred date if they are using postponed, all eligible job holders must be automatically enrolled. Eligible job holders are those who are between the age of 22 and state pension age, earn more than £10,000 per year, and work or ordinarily work in the UK. Eligible job holders can opt out after being enrolled. All other employees are either non-eligible job holders or entitled workers, and they can choose to join the workplace pension scheme. So in summary, AE is something that is optional for the employee, but mandatory for the employer. And just a note in relation to postponement, I'm aware that Some employers believe that if they postpone all their employees for, say, the 3-month period after staging, that they don't need to do anything in that particular 3-month period. And this is incorrect. Basically, within 6 weeks of the staging, they need to issue a letter, a communication to each employee just detailing the actual postponement and when they will be enrolled. If they don't do it within that 6-week period, effectively postponement is null and void, and the auto enrollment will have to be backdated to the start of the staging date, which can be a nightmare. So just one to watch out for your clients. Okay, so with AE comes a number of employer responsibilities. Employers must set up a pension scheme with a qualifying pension provider. Next, employers must assess their workforce at their staging date and enroll all eligible job holders unless they are using postponement, in which case it is a deferred date the duties kick in. Employers must also pass on the necessary communications to all employees, not just those who are automatically enrolled. Within 5 months of the staging date, employers must complete a declaration of compliance to notify the pensions regulator that they have complied with AE. There are also a number of ongoing employer responsibilities, such as handling opt-outs and opt-ins, making deductions and contributions, monitoring employees each pay period, and sending a contribution file to the pension provider. The pensions regulator has conducted some interesting research. 78% of small businesses will look to their bookkeeper, accountant, or payroll bureau provider for advice. And another thing that some bureaus don't know is that it is possible to look up client staging dates on the pension regulator's website. Almost 60,000 employers have staged so far, most of whom are large firms with existing workplace pension, a payroll or HR department, and in-house financial advisors. For most of the 1.25 million employers still to stage, and for the 250,000 new employers each year, this will be their first experience to review any kind of pension scheme for their employees. Some more interesting research by the pensions regulator. Advisors say that 50% of employers who have already enrolled have turned to them very close to their staging date. 3 out of 10 payroll administrators feel their clients will rely on them completely to help them through the process. And only 39% of payroll administrators feel their clients will be able to deal with any additional administrative demands involved in implementing AE. And finally, 8 in 10 believe that their clients will wait until the last minute to seek advice. So how will AE result in a new revenue stream for you? Just a discussion I had with a BrightPay customer recently. He was charging his 15-employee client £400 for handling their staging and deduct his payroll fees from £1 per payslip to £1.50 per payslip to cover the ongoing AE duties. Staging took him less than an hour, and that included actual registering with the pension provider as well. There were no additional software costs, and the ongoing duties were minimal in terms of his time. And most importantly, the client was delighted. Accountants have had a lot to deal with in recent years. Things have cost them in time, money, training, and new systems, in which they cannot readily recharge to their clients. Examples of these are RTI, IXBRL, FRS 102. AE is the one new change that you can charge for, and that should not cost you anything. 3 key points are evident. Employers will need help from payroll bureaus. Employers will probably come to you last minute for assistance, and employers will prefer to consolidate all their outsourced services to one provider. So the key questions to ask yourself are you prepared to offer AE services to clients? Are you willing to lose clients if you do not offer AE services? This is a real possibility. If you decide that you don't want to get involved, your clients may seek another advisor who will obviously try to convince your client to use them for everything else. And finally, will you make a profit from AE? And the answer to this last question, I believe, is yes. With the high level of employers set to enroll in the coming year, there is huge potential for bureaus to gain new clients and to increase fees with existing clients. Payroll bureaus have a relatively short window of opportunity to position themselves as open for business in this ever-increasing cluttered space. My advice is to be proactive and to find out on the pensions regulator website what each of your clients' staging dates are and contact them well in advance of their staging dates. Payroll bureaus will naturally increase their income by providing this service in exchange for an initial setup fee plus a monthly retainer to manage the ongoing AE duties or an increased price per payslip. One recurring theme I hear from accountants and bookkeepers alike is that they can't really charge for AE. Their clients wouldn't accept it or they can't afford it. My answer to this is that it's not your fault that AE has come in. It's not your fault that there are many new responsibilities attached to AE, and it's not your fault that there are penalties for non-compliance. One idea is to offer a free consultation with clients. This consultation allows you to explain the various administrative aspects of AE. The consultation approach will hopefully eliminate your clients seeking AE advice from you for free afterwards. Typically, a consultation will last for half an hour. It will also be useful to provide a PDF for your client explaining each of the AE duties. This information and a number of guides are available on the Pension Regulator's website. Payroll software is the logical fit for processing AE. Payroll will already hold details of age and earnings, and these are the two main elements in determining what AE actions are required at any stage. Payroll software can therefore readily handle AE, much like it took up the challenge of RTI. In fact, AE slots neatly alongside RTI as just one more tick box to check each pay period. There are over 30 administrative tasks to perform in relation to AE. Software solutions can automate employer responsibilities, which reduces the time spent on these tasks. With a combined payroll and AE solution in place, accountants, bookkeepers and payroll bureaus will benefit from greater efficiency, increased value added and improved cost savings. Payroll software that can automate the employer admin tasks such as employee assessment, personalized communications, ongoing monitoring, handling opt-outs, refunds, mandatory reporting and pension contribution deductions will be vital. If AE is not already included with your current payroll software as standard, you may have to pay additional costs for AE functionality and support. And so here's the start of the shameless plug. BrightPay is an easy-to-use payroll and AE solution that can do everything you need to provide a profitable AE service to your clients. With BrightPay, you can benefit from unlimited employers, unlimited employees, free phone and email support, all for just £199 plus VAT per annum. You can also benefit from a 60-day free trial, which has no limitations to the software. So I'm going to hand you over now to Rachel, who will show you just how easy AE can be. In this example, we'll be assuming that the employer, or you on their behalf, has already registered with a pension provider, in this case Nest. Registering with Nest should take only 30 minutes on average to complete. My own opinion in the matter of AE providers is that most small employers will probably choose Nest because it is government backed and has a mandate to accept all employers and employees, even the unprofitable ones, and it has been preparing for the tsunami for the last few years. Having said that, BrightPay will also accommodate the People's Pension and Now Pensions and many more, all of which are great schemes, and this list is constantly being added to. So thank you, Rachel.
Thanks, Paul. Okay, so today we're going to have a look at a company who are set up in BrightPay, who are set to stage on the 1st of May 2015 and are using Nest as their Auto Enrolment pension provider. So as soon as your staging date is known, within the Pensions tab, you must enter your staging date in the relevant field provided. This is to ensure that on-screen Auto Enrolment alerts start up at the right time for you. Adding a pension scheme is also straightforward and can be done in advance of your staging date. Simply click Add New Scheme and choose the relevant pension provider from the listing. You'll see here BrightPay currently supports 9 different pension providers, or if you want another pension provider, you can choose their Auto Enrolment support schemes. So in this instance, we're going to use Nest, and you must now enter your employer reference, and you will get this from the pension provider when you're registering with them. And in the next tab, you must enter your group name. So here I'll enter monthly. And you can now choose your contribution type, your earnings basis, and add additional groups if required. You may need more groups if employees are on different pay schedules, for example, weekly and monthly, or even if they're on the same schedule with different contribution rates. So I'll select Save here, and you'll see the scheme appearing up the top here. So if we go back to our payroll, and as soon as we reach our staging date, in this instance the 1st of May, you will see on-screen flags and alerts appear. BrightPay automatically assesses each individual employee to determine whether they're eligible job holders, non-eligible job holders, or entitled workers. So if we click here through the alerts, it'll bring you through to the relevant options available. So Amy here is an eligible job holder, so we can enrol her in a qualifying scheme, postpone her for up to 3 months, or mark her as exempt if applicable. So here we'll enrol Amy. So simply select the scheme you wish to enrol her into, select the tax relief and click Continue. BrightPay will automatically prepare the enrolment letter ready for printing, exporting to PDF, or emailing directly from within the software. So if I click in here to print preview, you'll see each letter is customized to each individual employee, and it will include details of the staging date, the contribution rates, her option to opt out if she wishes to do so, and general information about auto enrolment and how it affects the employee. So just close that down there again. And once the employee receives the letter, you simply mark it as done. So if we go back here now, you'll see that the flag beside Amy's name has disappeared, and that is to show that the auto enrolment duties for Amy have been completed. If we move on now to Benjamin, he's a non-eligible job holder, so he has slightly different options. We can print or export the right to opt-in letter. We can opt him into a qualifying scheme if he chooses to do so. We can postpone him or mark him as exempt. So I'll go into the letter here. Again, the letter can be printed, exported to PDF or emailed, and simply marked as done. Again, Carla, the third and final employee category, is an entitled worker. So she's slightly different options to that of Benjamin in that she has the right to join rather than the right to opt in. So a useful feature in BrightPay is the option to batch process more than one employee at the same time. So if I click in here to enrol Derek, and when enrolling one employee, you can choose to enrol multiple employees with these settings. So I'll click all the eligible job holders here, and then BrightPay will automatically create their enrolment letters again. Again, batch processing is also available for the letters, which can be printed, exported, emailed all at the same time and marked as done. Batch processing is also available for postponement, so I'm going to postpone the last two here. Click into postponement, you simply choose the deferral date. I'll postpone for 1 month, and again do it for multiple employees. And again, the letter and mark is done. So you'll see here all the flags have disappeared, and that's to show you that all your auto enrolment duties are completed. And you will see the contribution deductions showing up on the live calculation of the payslip. And if I finalize the payslips and go into print preview, you will see the contributions showing up on the employee's payslip here. BrightPay is also capable of completing the enrolment and contribution files for upload to the supported pension providers, which are these 9 pension providers here. So simply click the enrolment file, select along and complete direct debit, copy to all, just fill out the details and save the file to a location of your choice. This is then ready for upload to the pension provider's web portal. And since we're using Nest have recently announced an API where it can be done directly from within the software, so BrightPay will be able to handle this by the end of the year. Again, the contribution file is much the same. Go along, enter the details, payment due date, and again save the file to a location of your choice. Now if I click into employees, you can see here that each employee has their own auto enrolment tab. So say that Amy has decided she wants to opt out, you'll get an opt-out reference from the pension provider. So we'll click opt out and enter the opt-out reference, and Amy is then opted out. If we go back to the payroll and into the next pay period, you'll see Amy will get a refund of the pension contributions made to date. So you'll see here two flags have also reappeared. So these were the two employees that we postponed. BrightPay is automatically assessing each employee at each pay period, so you've no need to worry about assessing them yourself. So we'll view options and we will send them the letter. Okay, so if you'd like some auto-enrollment reports, this can be found in Analysis. Simply click New Report, enter the period, the employees and the columns. So if we go into the columns here, let's go in here, you'll see auto-enrollment here. You can choose the worker category, the enrollment date, all the different headings there. And if you want the individual contribution levels for the next scheme, you can also click this in Employer Items. Just tick each of those there. And when we click Run Report, it'll all show up here. So you have a breakdown of each of the different workers and their work categories, the dates, and all the contributions. So here you can save the report and it will appear in Favorite Reports up on the top, or you can print it, export it, or edit it if you wish. So I'll go back now to pensions, and within 5 months of your staging date, you need to complete the Declaration of Compliance. So once you have that completed, you can simply enter the date here just for your own record to ensure that is completed. And also, some of the pension providers do the communications for you, so if you just want to turn off the reminders in the software, you simply untick these boxes and click Save. So that completes my short demo for today. I'll pass you back now to Paul.
Okay, well, thank you for that, Rachel. I suppose it's important to point out as well that you probably saw a lot being demonstrated on screen there. I mean, it's staging that is the most labour-intensive part of auto-enrolment, and really Rachel showed you everything to do with staging and the sort of pay period after staging. After that, it's really just a case of monitoring employees, say ones that have reached the age of 22 or that are earning over a certain level. The payroll will do that automatically, or new employees, and then also sending the pension file in each month, or sorry, after each pay period, which hopefully will be a lot easier when the API work is completed. So, I suppose that the thing to appreciate is that the amount of work that goes into staging is not repeated throughout the year. Throughout the year, I mean, the number of auto-enrollment events that may occur would be quite small for the typical small company. You may only have 1 or 2 a year events as such. So just wanted to make that clear. So just to finish off the actual formal part of the presentation, just some key takeaways from the session today. Okay, the first one is, okay, be ready. Know what you need to know when asked by your clients. So with this very thing in mind, I recently published a paper on Accounting Web with the disrespectful title, Automatic Enrollment for Dummies. It's a 10-minute read, and I think it has everything you need to, if the client starts quizzing you about auto-enrollment, that, if you have the information within that particular article, you should be able to answer the questions that they need to know. We'll send you the PowerPoint after the webinar, and this will include a link to the article. The next takeaway is payroll software. Make sure you have the correct software and systems in place to prepare your clients easily for auto-enrollment, and be aware that some payroll packages only partially handle AE. Costs. Be aware of hidden costs when researching AE solutions. You need to think about any limitations when it comes to the number of employers and employees that might be built into those costs. Customer support. confirm that support costs are included or inexpensive with your chosen payroll software solution. And be open for business. Be proactive and inform your clients that you are open for auto enrollment business. Okay, so I suppose at this stage we'll have a look and see how some of the questions that are coming in, and hopefully I'll be able to answer them. So, okay, first question I see here. If all employees are paid less than £10,000 salary, can they be exempt and asked for not to be enrolled to the pension authority? Well, if they're on 10,000, they're probably a non-eligible job holder. They still must be given the option to join, or sorry, the option to enroll in the workplace pension scheme. So if they decide that they don't want to join or enroll, that's fair enough. But you still, the employer will still need to register with a pension scheme and do the various communications. Can I download all slides shown? Yeah, we'll make that available within the day of this particular presentation. Can the directors of a small company limited of a small family limited company whose salary is less than 10,000 a year opt out as well? Well, again, if they're less than 10,000, they don't actually have to opt into enrolment. And just one other thing I just wanted to point out about directors, limited companies, say limited company with a single director, they're not actually regarded as an employer by the pensions regulator, and there is a procedure for informing the pensions regulator that they are not, that they don't have to sort of go along with auto enrollment requirements. Basically, they're opting out of the whole thing. I included a link to that page within the pensions regulator website in a blog I published recently on brightpay.co.uk. So you might find that useful for any of those small employers, single director companies. Can you delay new employees for a period of time? Yes, you can delay for up to 3 months. Does BrightPay do it and maintain an audit trail of ongoing AE correspondence? It doesn't actually keep copies of the communications, but when you mark the communication as done, BrightPay will know that it doesn't need to keep reminding you about it. So, I mean, typically, I suppose people probably print that correspondence PDF if they want to save it electronically, or do a photocopy for a paper file. Sorry, hang on a sec. I have a large company that has already staged that I prepare on Sage. Each employee has many pay elements and deductions. How easy is it to transfer the data onto BrightPay? Yeah, well, we have help screens done up there for importing from Sage. Sage actually provides a facility where you can export to a CSV file, and we were able to actually import that CSV file into BrightPay. Is BrightPay able to upload report to pension provider, or will it be featured to be added later? Thank you. I think what might be referring to there is the API. At the moment, the way it works is you need to save the file to your computer, then log into the pension provider's web portal and upload the file from your computer to the portal. But when the API comes in and it's fully tested, hopefully by the end of the year, it'll be a bit like RTI. All you need to do is hit a button and the information will directly upload to the pension provider. What happens if you have a new employee who wants to transfer their pension from a previous employer? What is the process? Is it through pension provider or Payroll Bureau? Now, a new employee who wants to transfer their pension from a previous employer, the new employer doesn't have any obligation to basically register with the same pension provider as that previous employee, as the previous employer. So, okay, if the new employer has already staged, they can offer enrollment basically to that new employee to the existing pension provider that the new employer has, if you know what I mean. If the new employer hasn't staged, again, that new employer has no duty or obligation to enroll early, to enter the whole auto enrollment scene early. However, there are mechanisms whereby the employee can actually continue their contributions to, say, the likes of Nest. Do you know anything about that, Rachel?
I'm not 100% no.
Yeah. Well, I tell you what, maybe we'll come back, we'll email a thorough answer to that one after the webinar. The new rules are that if there is more than one director and no other employees, the company is exempt. If there is more than one director and no other employees, the company is exempt, provided no more than one director has an employment contract. Yes, you're correct there. I was just specifically referring to one director companies beforehand. Can I still date my payroll as the last day of the month? Yes. Is it necessary to set up a pension scheme with Nest if all employees are non-eligible? It's my understanding that you do need to register with a pension provider just to have it available if any of your employees decide to opt in, or alternatively, if they become an eligible job holder, that there is a pension scheme already set up for them to enroll with. Now, practically, I suppose if somebody doesn't have a pension scheme set up, it can be done very fast anyway. It can be done in a matter of an hour to do it, setting up and registering with a pension provider. So, it's up to yourself whether you want to leave that to the last minute or not. Who do employees go back to opt out? They go to the actual pension provider, and the pension provider will then tell you that the employee has opted out. Are you aware of any other pension providers who are planning to offer an API link for uploading data? Well, I believe that now, and the People's Pension, I think Standard Life, I think they'll all be going down this route, because once Nest does it, if they want to sort of remain competitive with the likes of Nest in terms of ease of use, I think they'll all have to do it. There also is another provider, well, not actually a provider, there's a company called Pension Sync or System Sync, who are providing a facility for an API, which is like a default API using PAPDIS specification that all providers will be able to opt into. And that's another thing we are looking at including in BrightPay. If a small company director if a small company director paid less than 5,000 annual salary, they still need to stage. What if you do not stage? Okay, I think the answer to that one, I'm not sure whether you're saying the small company director is the only employee there. If that was the case, they don't actually need to stage, because they can actually opt out of the whole thing beforehand. Assuming that they do still need to comply with auto enrollment, there was probably another employee apart from the director, they do need to stage. And if they don't stage, they're basically the pension provider, the pensions regulator would know that when they don't get the declaration of compliance, they would know to maybe instigate penalty proceedings or such like. If the company has a policy that all employees do not receive a refund when they opt out, are there settings in BrightPay that can automatically set this? If the company has a policy that all employees do not receive a refund, I'm not sure you can do that. I think you're actually obliged to give the refund if they opt out within the opt-out period. Now I'm open to correction on that one. Okay, that's all the questions we have. Not just one more here. Will there be a recording of this webinar to view? I would like to show it to colleagues. Yes, we will have that up there in a couple of days' time. And also, the other thing I should say is that if anybody wants, say, to have a one-to-one online demonstration, all they need to do is ring here. It's 0845 3004 304, and and Anne Tai is very proficient at giving these demonstrations. It's only take about 10 to 15 minutes. She uses a facility called Join Me. So basically you can see our screens and you can be asking her questions and such like. So hopefully that will be of some use to you. Okay, so I think that's probably it this afternoon.
Thanks everyone for coming today. Yeah. And we'll email out the recording of the video and the copy of the presentation slides either later today or tomorrow. So thanks everyone.
Thank you very much. Bye.